Hi, this is Niles Mativ from Money and Markets TV. Normally, I don't name individual investment recommendations in these videos. But today, I'm going to make an exception and tell you about 3 of the biggest winners in my Income Superstars portfolios last year. They helped my subscribers make quite a lot of money, and they easily beat the S&P 500, which produced 0 capital appreciation in 2011. First up is Hershey, which jumped 32% last year, not including dividends. A lot of investors had been concerned that higher commodity prices, especially cocoa and sugar, would hurt the company's bottom line. But Hershey has been able to shrug off those fears, largely because of something that I look for in many of the companies I recommend: a healthy stable of brands. That's one big factor that has allowed Hershey shares to keep rising. In addition, the company sells products that most consumers buy regardless of economic conditions. If anything, candy is a cheap luxury. But Hershey has something else I look for in my stocks: a tremendous history of steadily rising dividends. In 2011 alone, the company boosted its payout by 7.8%, and it has hiked its dividend for a remarkable 39 years straight. By the way, Hershey's performance last year was no fluke. Since I first recommended the stock in November of 2009, it's produced a total return of 83%, while the S&P 500 returned less than 15%. Another one of my favorite companies is Consolidated Edison, a utility company considered boring or old-fashioned by many investors. But it's a 1-year capital gain of 25% boring? Or how about an extra 4% in dividends on top of that? I made 2 separate recommendations to buy Con Ed, one back in August of 2007 and another in December of 2008. Those who bought the stock after the second call would have gotten a total return of nearly 79%, while the S&P 500 has lost ground. I recommended the company because it provides a service that pretty much everyone uses. More importantly, it has a virtual monopoly on one of the richest markets in the country, the greater New York metro area. Add to that a favorable interest rate environment, solid financials, and a terrific dividend history, and this kind of investment is an obvious winner. But for some reason, it's still ignored by most people. That's fine with me. Let everyone else call our stocks boring, and we'll continue laughing all the way to the bank. The final company I want to talk about today is Philip Morris International. Now, I know that some people have a problem with tobacco business, but there's no denying that big tobacco can produce big profits. Just look at Philip Morris's performance last year, up 34%, not including dividends. Like Hershey and Con Ed, this pick is all about big brands, products that people buy consistently, and a solid dividend history. Philip Morris, which was spun off from Altria's domestic business, also benefits from another important trend you should be paying attention to: strong demand from foreign markets. In addition, it can also get a boost from currency moves, since its business is conducted around the world. Like Con Ed, I've recommended these shares 2 different times, producing total returns of about 70% since March of 2008 and nearly 107% since January of 2009. Of course, not every stock I've recommended has done as well as the 3 I highlighted today, but we did have plenty of other winners last year, and I believe you can do just as well looking for similar characteristics in the investments you buy in 2012. I'm Niles Mativ from Money and Markets TV. Thanks for watching.